You open your investing app, not because you're excited, not because you're confident, just because you always do. You scroll through your portfolio, some numbers are green, some are red, but none of it feels like it means anything. You're investing, but you're not winning. And that's the part nobody talks about. You followed the rules, you did what everyone told you, you saved, you invested, you were patient. So why does it still feel like everyone else is getting rich and you're just staying the same? Why does it feel like every time there's a big opportunity, you hear about it after it already happened? That quiet frustration in your chest, that feeling like you're always one step behind, that's not because you're bad with money. It's because the system rewards people who move before things look obvious. And today, I want to show you one stock that most people are completely sleeping on, but could quietly explode over the next 6 months. Not because it's exciting, not because it's trending, but because money is starting to move toward it and most people don't even see it yet. Welcome to Boom Invests, where we don't chase hype, we follow money. If you're someone who is trying to grow your wealth, escape the paycheck-to-paycheck cycle, and finally make your money work for you instead of against you, make sure you subscribe. And if this video helps you think differently about investing, hit that like button. It tells the algorithm to show this to more people who need it. Now look, I'm not here to sell you dreams. I'm here to show you how wealth actually gets created, and it almost never looks exciting at the beginning. Here's what most people don't realize. The biggest money in the stock market is made in silence. Not on Twitter, not on TikTok, not in headlines. It's made when expectations are low and reality is quietly improving. From the first day you hear about investing, you're told one thing: buy good companies and hold them. That sounds smart. It sounds responsible, but it hides something dangerous because the stock market does not reward good companies. It rewards mispriced expectations. A company can be amazing and still be a terrible stock, and a boring company can quietly make investors rich. Between 2000 and 2010, Microsoft grew its revenue, profits, and influence, but its stock went nowhere for an entire decade. Why? Because everyone already expected greatness. There was no surprise left. Meanwhile, boring utility companies doubled, not because they were better businesses, but because no one was paying attention. This is where it gets really interesting. Most investors don't think like investors. They think like humans. And humans are wired to chase what feels safe and exciting. Your brain wants what everyone is talking about, what looks impressive, what makes you feel smart. So you buy what's popular. But popular means expensive. Expensive means expectations are high. And when expectations are high, even good news isn't enough. That's why most people buy stocks right before they stall and sell them right before they rise. It's not because they're stupid. It's because their brain is wired for comfort, not profit. There are 3 things that move markets: earnings, interest rates, capital flows. Most people focus on earnings. Some people focus on rates. Almost nobody talks about capital flows. Capital flow simply means where is big money moving right now? Not what's trending, not what's being talked about. Where is money quietly rotating? Because money moves before headlines change. And right now, money is moving into something most people think is boring. Since 2021, retail investors have been obsessed with tech, AI, crypto, meme stocks. Meanwhile, one entire part of the market was crushed: energy infrastructure, pipelines, gas transport, storage, power networks. These stocks are down 40 to 60% from their highs, while the S&P 500 is near record levels. That gap never lasts forever. Money always moves from what's crowded to what's ignored. And according to Bank of America's Global Fund Manager Survey, big money has started increasing exposure to energy and infrastructure at the fastest pace since 2020. That means institutions are buying while retail investors are still distracted. That's exactly where big returns come from. Let's talk about one company sitting right in the middle of this shift. This is not hype. This is not TikTok. This is cash flow. The company is Kinder Morgan. Kinder Morgan owns over 80,000 miles of energy pipelines across North America. They move natural gas, oil, energy products. They don't bet on prices. They get paid for moving the product. They're the toll road of the energy economy. And here's what most people don't realize. The US is becoming the world's largest exporter of natural gas. According to the US Energy Administration, LNG exports are projected to rise over 50% by 2026. Someone has to move that gas. Kinder Morgan is one of the biggest companies that does. Data centers, electric vehicles, new factories, all of it requires massive energy. And natural gas is the bridge fuel for the next decade. That means pipelines. That means toll collectors. That means Kinder Morgan. But here's the twist. The stock is still priced like nothing is happening. That's opportunity. Kinder Morgan trades around 15 times earnings. The S&P 500 trades around 22. That means the market values boring infrastructure far less than hype. Kinder Morgan also pays a 6% dividend. So if you invest $10,000, you get about $600 per year just for holding. That's real cash. And that dividend is supported by long-term contracts, not vibes, not hype, contracts. It's not exciting. There's no story, no hype, no next Tesla. So people scroll past it, which is exactly why it's interesting. Because money is made where attention is missing. Three things are lining up. Interest rates are likely coming down, energy demand is rising, and money is rotating out of expensive tech. That's a perfect storm for boring cash flow companies, and Kinder Morgan sits right in the middle of it. Right now, most people are waiting for confirmation, waiting for headlines, waiting until it feels safe. But the market never rewards safe. It rewards early. Here's something that will completely change how you see the stock market. Big investors don't look for excitement. They look for mispricing. They ask one question: where is reality better than expectations? Right now, expectations for energy infrastructure are extremely low. Most people think old industry, slow, dying. But reality says natural gas demand is rising, exports are exploding, power usage from AI and data centers is surging. This gap between perception and reality is where money is made. Wall Street buys when nobody cares. Retail buys when everyone is excited. That's why retail is always late. The biggest trap isn't picking the wrong stock. It's waiting to feel safe. Your brain wants certainty, but certainty only comes after prices have already gone up. So most people wait, and while they wait, money moves. Here's what most people don't realize. By the time a stock feels safe, the easy money is already gone. Kinder Morgan doesn't look exciting. That's why it's cheap. That's why it's powerful. Kinder Morgan doesn't need perfect oil prices, perfect gas prices, perfect headlines. They get paid for moving energy. That means stable cash flow, predictable revenue, growing demand. This is exactly what big money wants when rates fall. Why? Because when interest rates go down, dividend-paying stocks become more valuable, and Kinder Morgan pays a high dividend. So when money looks for income, this becomes attractive. That's the rotation. Your brain is wired for stories. It wants heroes, it wants drama, it wants something to brag about. No one brags about pipeline stocks, so no one buys them. But wealth isn't built with stories, it's built with boring consistency. That's why the richest investors you've never heard of own railroads, utilities, infrastructure, not meme stocks. A smart investor doesn't ask what's popular. They ask what's ignored but improving. Right now, energy infrastructure is ignored, but the fundamentals are improving. That's the setup. This is not financial advice. This is a way of thinking. Here's what you do. Don't go all in. Build a position slowly. Hold while others are bored. Collect the dividend. Let the rotation do its work. You're not betting on hype. You're betting on money flow. You don't need to predict the future. You just need to notice where is money quietly moving right now. And right now, it's moving into boring, cash-flowing, undervalued assets, while everyone else chases excitement. Most people think investing is about being smart. It's not. It's about being early to what feels boring. And right now, most people are sleeping. Don't be one of them. This is Boom Invests.